Hello, folks. Welcome to today's live session, and this is the volatility indices. So that's what we're going to be focusing on today, and we're going to be looking specifically at trading daily highs and lows, and also using significant liquidity pools. So, in this market scenario, what we'll be looking at is how to trade whenever a significant liquidity pool has been taken out. So let me reiterate that. Trading daily highs and lows whenever a daily significant liquidity pool has been taken out. So what I'm trying to make us understand is we see this significant low or liquidity pool being taken out. And one thing I've noticed about trading in this kind of market is that whenever a significant liquidity pool is being taken out, it takes a while for the market to either reverse or retrace a bit. All right. So that's what we are going to be looking at, how to capitalize on this kind of trades. So the first thing I want us to do is to mark today's session. We'll go deeper into what might happen in today's market. But first, let's break down what is going on right here. And one thing I want you to notice is that wherever you see a rejection in the market, a rejection candle appear, the market is trying to communicate or tell you something that is going on. So as a trader, you need to go into the lower time frames to find out what exactly is going on right there in the market and interpret it correctly. And one thing about the markets here is that it's built on taking out traders. So it's always seeking liquidity pool, those little highs and lows where traders are always being caught. So we can see it right there. This high was taken out. This low was then taken out. So we're going to go on the lower time frame to get a bit more understanding of what's going on right there in the market. So after that significant low was taken out, we know that it's going to take a bit of time for the market to reverse or retrace. So then when we see that rejection is a signal that we should be getting ready. So I'm going to mark it right there. We wait for the next day. It continues to go low and we see another rejection. Two big beautiful candles on the daily time frame. And then we wait to see what's going on. We want to see a draw on liquidity. Then we see that this high right there was taken out. That was a draw on liquidity. Now we wait for the close of that daily candle. Moving on to a lower time frame, a forward chart, to see what exactly is going on right there. So right now we see that the market was in a trending phase, still moving low, printing lower lows in the market. So we know that it's bearish. All right. So after this buy side liquidity was taken out, we see heavy rejection blocks on the 4-hour time frame. And the higher the time frame and the signal that is given tells you how far the market is likely to go in one direction. So if this was on a 1-minute chart, it wouldn't have gone really far. I'm just giving an example. But since it's on a 4-hour chart, we saw that there was enough push to send it lower to the downside to then take out liquidity. So using that kind of knowledge and understanding, we see rejection right there. Rejection right there. So we mark this zone because it's a zone of interest right there. After that liquidity pool has been taken out, we see rejection. We see it again. So we know that the market right now is predisposed to go lower. And how far it goes might be held by the time frame it's given that signal. On a forward time frame, it's very heavy. So moving on to the 1-minute chart to see what's going on. And we can see this much clear that the market was moving upwards, took out liquidity, came back down. Okay, so now looking at this, some traders might enter immediately when this high is taken out. That's fine. Some might wait for the close of that candle. That's also fine. But knowing this kind of market is always seeking to take traders out. So we know for a fact that there's a high probability of the market going back up to take out this high right there. And the reason why I'm saying that is because when we move on to a 15 minutes chart, let's see, we can see that the market was still in its trending phase. So as a smart trader, you don't take your entries immediately, because it could come back, bounce off this block right there and continue its move to the upside, right? So we're going to wait to see a more solid entry. So we're anticipating for solid entries, and I know for a fact that it's going to seek liquidity, a way to take traders out. And I know this is a liquidity pool right there. So when the market takes traders out right there, I might be looking for a sell, right? I might be looking for a sell, but I know for a fact that it's going to seek out liquidity even higher. So we see it goes, takes those traders out, and then the market reverses. So this is what you should be looking for. In a case or in a scenario where you miss this entry, we know there's structure right there. On a 5-minute chart, we can see there was structure right there, came, broke that structure, went back into this fair value gap, rejection candle. That's also another sell entry. Wait for that rejection and we'll pick ourselves to the downside. So that's just what I want you to grasp for this session, and we can see how it went all the way down to take out this daily, another significant low. And after taking it out, we saw how it took time to reverse. It did not reverse immediately. So you need to be very patient as a trader. We saw it come down, went even more, came back. We saw a bit of accumulation right there, and we saw a sharp move to the upside all the way into today's market. So now we're going to be looking at today's market to see, based on this knowledge, what can we be able to get from today's market, or how can we pick trades using that analogy for today's market. So right there on the daily time frame, in order for us not to get confused, let's just clean up everything. Okay, so wanna mark that there's been a draw on liquidity, so it took both sellers were taken out here, buyers were taken out here. So let's go on a lower time frame for our chart to see exactly what's going on. So we saw after that there was a build up of liquidity pool right there. Market just went boom for all that, and we see rejection block after taking out this high. So market is predisposed to go even lower, maybe. So one thing I want you to pay close attention to is this candle that took out liquidity on the upside. So right now in this phase, the market can come trading here a bit and continues their upside. We might not be certain what exactly the market might be looking at doing, but from a fact, we can see that there's been a break of structure with this sharp candle on the 1 hour time frame, and we are seeing it trade a bit into that candle. We might see a reversal to the downside. Now in my trading, I like to use the moving average. It helps to know possible resistance and support zones. So looking at the moving average on the 1 hour time frame, even if the market is to go down, it might reverse at this side after it takes out this liquidity. Let's go on a 5-minute chart to see exactly what's going on. In order for many of you not to get confused, we can see a lot of sell side here. We see that retracement comes back into this fair value gap, and you might see continuous move to the upside using this zone, this fair value gap, as a point of entry. You want to take sales here, and since we know the market is built on taking out liquidity, you might see it even go higher to this zone. So stop losses should be above this high right there, and we're looking for an opportunity to sell the market even lower to the downside. So our focus being this entire space, I'll be looking for these lows to be taken out, and we'll see how market will react to those lows. But ultimately, since this was a significant low that was taken out, we saw the market respect that, retrace and breakthrough. We might see a more sharp move to the downside to mitigate all these imbalances that was created in the market. So that's one thing I want us to pay attention. So thank you very much for staying to the end of this video. See you guys in the next video.